The world is watching a silent war unfold. It is not fought with guns or bombs. It is fought with silver. Two superpowers, China and America, are locked in a fierce battle over this shiny metal. Most people do not understand why. The truth is hidden beneath layers of economics, technology, and power. Silver is not just jewelry or coins anymore. It has become a weapon, a strategic tool, a metal that can decide the future of nations. And right now, China is winning this war. Let us start with a simple fact. Silver is everywhere in modern life. Your smartphone cannot work without it. Solar panels need it. Electric cars require it. Computer chips depend on it. Military missiles use hundreds of ounces per unit. Without silver, our high-tech world stops. Here is where the problem begins. China controls most of the world's silver supply chain. Not because they mine the most. Mexico actually produces more silver than China. But China controls something more important. They control the processing. They control the exports. And now they control the prices. In November 2025, China dropped a bombshell. They announced new export restrictions on silver starting January 2026. This is not a small change. It is a complete shift in global power. These restrictions mean China can decide who gets silver and who does not. They can control prices. They can choke supply to enemies and reward friends. Why would China do this? The answer is simple. They learned from their mistakes. For years, China exported rare earth metals cheaply. The West used these metals to build advanced weapons and technology. Then, they competed against China. Beijing realized they were helping their rivals grow strong. They decided to stop making that mistake. Silver follows the same playbook. China has been quietly stockpiling silver while selling it to the West. Reports suggest they have built massive reserves. Meanwhile, they sold silver to Western countries at controlled prices. This kept global prices artificially low. Western industries got cheap silver. They built entire supply chains depending on Chinese exports. Now China is pulling the rug out. The export licensing system starting in 2026 means every silver shipment needs government approval. China can reduce exports slowly, or they can stop them completely. Either way, the West is trapped. The timing is perfect from China's perspective. The world is facing a massive silver shortage. For 5 consecutive years, global silver consumption has exceeded production. The deficit is growing. In 2025 alone, the world will be short by approximately 117 million ounces. That is one of the largest shortfalls in recent history. The shortage is not temporary. It is structural. Silver mines are declining. Production in major mining countries like Mexico, Peru, and Chile has peaked. Opening new mines takes 5 to 7 years. Investment is expensive. Environmental permits are hard to get. The supply side cannot respond quickly. Meanwhile, demand is exploding. The green energy revolution is eating up silver like never before. Solar panels are the biggest culprit. Each solar panel contains about 20 grams of silver. The world is installing solar panels at record speed. In 2024, solar panels consumed over 30% of all industrial silver demand. That number is rising. Electric vehicles need silver too. Each EV contains more silver than traditional cars. The wiring, the batteries, the control systems all require silver. As the world transitions to electric transportation, silver demand from this sector is growing at 3.4% per year. Then there is artificial intelligence. AI data centers are mushrooming everywhere. These facilities need massive amounts of silver. The cooling systems, the power distribution, the backup systems all use silver. AI chips themselves require silver because it prevents overheating in densely packed circuits. Defense applications add another layer. Modern weapons are silver hungry. A single Tomahawk missile reportedly contains hundreds of ounces of silver. Fighter jets, satellites, night vision systems, guidance systems, naval equipment all require silver. As global tensions rise and military budgets expand, defense demand for silver is skyrocketing. Add it all up and you see the problem. Supply is falling, demand is surging, and China controls the valve. America sees this threat clearly. That is why in November 2025, the US government officially added silver to its critical minerals list. This list includes materials essential for national security and the economy. Silver joined copper, lithium, and rare earths on this exclusive list. This designation is not symbolic. It unlocks government programs to secure supply. It allows emergency stockpiling. It enables fast-track permits for new mines. It recognizes that America has a silver problem, and that problem has a name: China. The numbers tell a stark story. America imports most of its silver. Domestic production is nowhere near enough. The strategic stockpiles are nearly empty. During World War II, the US had massive silver reserves. They used them for military production. Today, those reserves are gone. If China restricts silver exports by just 50%, the global deficit could exceed 5,000 tons annually. That would create chaos in Western industries. Solar panel factories would shut down. Electronics manufacturers would face shortages. Defense contractors would scramble for supply. Prices would explode. This is not speculation. It is already happening. Silver prices have surged dramatically in 2025. The metal has risen over 70% year to date. It recently touched $63 per ounce. That is near all-time highs. The reason is simple. Markets are pricing in the coming supply crisis. Interestingly, silver is outperforming gold. Historically, silver trades at about 60 to 80 times less than gold. Right now, silver is only 1.4% of gold's price. This ratio suggests silver is extremely undervalued. Some analysts believe silver could reach $100 or even $200 per ounce in the next few years. But price is only part of the story. The real issue is availability. You can have all the money in the world, but if there is no silver to buy, price does not matter. This is where China's strategy becomes brilliant. By restricting exports, China ensures its own industries have guaranteed supply. Chinese solar manufacturers do not worry about silver shortages. Chinese electronics makers know they will get the metal they need. Chinese defense contractors have secure access. This gives Chinese companies a massive competitive advantage over Western rivals. Western companies now face a dilemma. They can try to source silver from non-Chinese suppliers, but there are not many options. Mexico is the world's largest silver producer. However, 74% of Mexican silver mines are owned by Canadian companies. Peru is second in production, but China has deep investment ties with Peru through free trade agreements and mining investments. The reality is stark. Even non-Chinese silver production often flows through Chinese processing facilities. China controls the refining capacity. They control the supply chains. They control the logistics. Bypassing China is nearly impossible in the short term. Some hope lies in recycling. Silver is recyclable. Electronics waste contains significant silver. Urban mining could recover millions of ounces. But recycling infrastructure takes time to build. It requires technology investment. It needs collection networks. And even at full capacity, recycling cannot close the supply gap. Others point to new mines. Canada, the United States, and Australia have silver deposits. With enough investment, these could be developed. But we're talking about a 5 to 10-year timeline. Environmental permits alone take years. Mine construction is expensive. And there is no guarantee these projects will be profitable at any given silver price. Meanwhile, China is not standing still. They continue to accumulate silver. Reports suggest Chinese investors are buying physical silver at prices 10% higher than Western markets. This is unprecedented. It signals that China views silver as a strategic asset, not just a commodity. There are rumors of massive Chinese silver stockpiles. Some analysts estimate China holds tens of thousands of tons of silver reserves. These are not official numbers. China does not publish its silver holdings, but trading patterns, import data, and warehouse stocks all point to significant accumulation. This strategy mirrors what China did with gold. For years, China bought gold quietly while keeping official reserves unchanged. Then suddenly, they announced massive reserve increases. The same pattern may be playing out with silver. Why does China want so much silver? The answer is multifaceted. First, industrial needs. China is the world's factory. They produce most solar panels. They manufacture most electronics. They are building massive renewable energy infrastructure. Securing silver supply is essential for these industries. Second, monetary strategy. China is working to reduce dependence on the US dollar. They are building alternative payment systems. Gold and silver provide a hedge against dollar instability. Some analysts believe China may eventually back the yuan partially with precious metals. Third, geopolitical leverage. By controlling critical materials, China gains influence over other nations. Countries that need silver must stay on good terms with Beijing. This creates political power that extends far beyond economics. The West is scrambling to respond. The United States has announced plans to rebuild strategic reserves, but this is expensive. At current prices, buying enough silver for national reserves could cost over $50 billion, and large government purchases would push prices even higher. Europe faces similar challenges. European Union countries consume massive amounts of silver for industry. But Europe has minimal domestic production. They are almost entirely dependent on imports. This vulnerability is now a major security concern. There is also the paper-silver problem. Most silver trading happens on paper. Futures contracts, ETFs, and certificates represent claims on silver, but physical silver is much scarcer. The ratio of paper silver to physical silver is estimated at over 300 to 1. This means 300 ounces of paper silver exist for every ounce of actual metal. The system works fine until people demand physical delivery. Then the house of cards collapses. Some believe we are heading toward this scenario. As trust in financial systems wavers, investors want physical metal, not paper promises. When the scramble for physical silver intensifies, prices could go vertical. Signs of stress are already visible. In late 2025, the Chicago Mercantile Exchange briefly halted silver trading. They cited technical issues. But many suspect the real reason was inability to meet delivery demands. Similar stress appeared in London and Shanghai silver markets. Lease rates for silver have spiked. This is a technical indicator that shows physical tightness. When lease rates rise sharply, it means people are desperate to borrow physical silver. They are willing to pay high interest rates for temporary access. This happened in October 2025, signaling severe physical shortages. China is watching these developments closely. Every market disruption strengthens their hand. Every supply squeeze increases their leverage. The West is realizing, perhaps too late, that they built their modern economy on a foundation of Chinese supply chains. The situation is creating some strange alliances. Countries that normally compete are now cooperating on silver supply. Japan, South Korea, and Australia are discussing joint stockpiling. European nations are coordinating purchasing programs. Even the United States is quietly approaching Latin American countries for supply agreements. But these efforts face obstacles. New supply agreements take time to negotiate. Trust must be built. Infrastructure must be created. And China can outbid almost anyone for available supply. With their massive foreign currency reserves, China can pay higher prices than most countries can afford. There is also the question of substitution. Can silver be replaced in critical applications? The answer is complicated. For some uses, alternatives exist. Copper can replace silver in some electrical applications. But copper is less efficient. It generates more heat. In high-performance applications, silver is irreplaceable. In solar panels, companies are researching alternatives. Copper nanowires show promise. But the technology is not ready for mass production. Even if alternatives arrive, transitioning entire manufacturing processes takes years. In the short term, there is no escape from silver dependency. The defense sector faces the toughest challenge. Military applications require the highest reliability. Performance cannot be compromised. Silver's unique properties, highest electrical conductivity, highest thermal conductivity, best optical reflectivity, make it essential for weapon systems. No substitute comes close. This is where national security and economics collide. The Pentagon recognizes that Chinese control of silver supply is a strategic vulnerability. If China cut off silver exports during a conflict, U.S. weapons production would be severely impaired. This is unacceptable from a defense planning perspective. Some propose rationing. If silver becomes scarce, governments might allocate it by priority. Defense would come first, critical infrastructure second, consumer products last. This would cause economic disruption, but protect essential functions. However, rationing systems are politically difficult and economically inefficient. The deeper issue is trust. For decades, global supply chains operated on trust. Countries believed that economic interdependence prevented conflict. The theory was simple. If nations trade, they will not fight. China's silver restrictions show this theory has limits. When strategic resources are involved, economic logic gives way to national interest. China has decided that maintaining its own industrial advantage is more important than free trade principles. This marks a return to resource nationalism. Other countries will likely follow suit. We may be entering an era where critical materials are treated like weapons. Export controls, stockpiling, strategic partnerships, and supply chain security will dominate government thinking. The free-flowing global commodity markets of the past may not return. For investors, this creates opportunities and risks. Silver is clearly in a bull market. The supply-demand fundamentals are extremely bullish. Geopolitical tensions add fuel to the fire. Many analysts predict silver will reach triple digits in the coming years. But investing in silver is not simple. Physical silver must be stored securely. Storage costs money. Insurance costs money. Liquidity can be limited during crises. Paper silver investments carry counterparty risk. If the system breaks, will you actually get your metal? Silver mining stocks offer leveraged exposure. When silver prices rise, mining companies' profits multiply. But mining is risky. Projects can fail. Costs can overrun. Political risks exist. Not all silver companies will succeed. The situation also raises philosophical questions. How did we become so dependent on one country? Why did Western nations allow their strategic industries to be outsourced? Was short-term profit worth long-term vulnerability? These questions are being asked in capitals around the world. The answers are driving policy changes, reshoring manufacturing, friendshoring supply chains, building strategic reserves, subsidizing domestic production. These trends will shape the next decade. China is also taking risks. If they push too hard, they might trigger a backlash. Countries could form a united front against Chinese resource dominance. Technology breakthroughs might reduce silver dependency. Over-controlling markets often creates the conditions for your own decline. History provides lessons. In the 1970s, OPEC tried to use oil as a weapon. Prices skyrocketed. But high prices triggered conservation, alternatives, and new supply. Within a decade, OPEC's power had diminished. China may face similar dynamics with silver. However, silver is different from oil in important ways. It cannot be synthesized. There are no massive undiscovered reserves waiting to be tapped. Demand is driven by technology transitions that cannot be reversed. The silver situation may be more intractable than past resource conflicts. For ordinary people, this clash seems distant, but it affects everyone. Higher silver prices mean more expensive solar panels. That slows the clean energy transition. More expensive electronics mean higher costs for phones, computers, and appliances. Defense spending increases as militaries secure supply chains. The China-America silver clash is also about the future world order. Will China's model of state-controlled resource nationalism prevail, or will the West find ways to maintain open markets and free trade? The outcome will shape geopolitics for generations. Right now, momentum favors China. They have the stockpiles. They have the processing capacity. They have the strategic vision. America and its allies are playing catch-up. But the game is not over. The West has technology, capital, and alliances. How these advantages are deployed will determine the outcome. One thing is certain, silver is no longer just a precious metal. It is a strategic asset, a geopolitical tool, a source of national power. The hidden truths about the China-America Silver War are now exposed. The world will never look at this shiny metal the same way again. The battle for silver is really a battle for the future, and that battle is just beginning.